2025, my taxable accounts paid me $1,155 in dividends, real cash that I then reinvested back into the same positions. I call this a little thank you that I get for holding certain investments. We're going to be taking a look at companies like Google and Target, as well as funds and investments that you're familiar with, like SCHD, Realty Income, and Main Street Capital. So let's jump into the numbers. We're going to start off with some income-focused, reliable core positions like Realty Income, ticker symbol O. And these are names that are built to consistently pay you through dividends. I received my largest dividend from Realty Income at $350.61. This is a position that I've actually sold some shares of throughout this last quarter of the year. I'm currently down to 105 shares. My average cost is $56.85, and the current share price is about $57. So I haven't received any growth when it comes to this investment, but yes, I get that steady dividend. It's known as the monthly paying dividend company, and it's one of the most talked about monthly dividend investments. It's a REIT, a real estate investment trust, and that investors are watching interest rates and commercial real estate closely related to how this investment will perform in the future. But Realty Income is doing what it's known for, paying out those monthly payments, having those long-term leases from diversified tenants like Walgreens, FedEx, and 7-Eleven. Morgan Stanley recently increased their price target for Realty Income from $62 up to $65, which are both still below the current share price. But analysts are expecting a stronger earnings outlook when it comes to Realty Income. And of course, keeping in mind the key strength of this business, which is those reliable triple net lease tenants that they have. These are tenants that pay their own taxes and maintenance. And the company has been expanding into the European market. But when it comes to my portfolio, I think I'm going to sell a few more shares because I feel like this is an investment for when I am totally in the preservation stage and ready to tap into that steady income. Okay, next up, Main Street Capital. I received $174.46. And Main Street Capital is a BDC, a business development company. They lend money to small and middle-sized businesses to help them grow. And by law, BDCs must pay out 90% of their taxable income to shareholders and dividends. So Maine continues to be a standout because they pay out those monthly dividends. They also pay out special dividends on the quarter. They have a strong balance sheet and have remained profitable throughout 2025. I'm currently holding 44 shares, and I'm up 47% when it comes to this investment. Now, let's move on to a couple of ETFs that also pay a dividend, starting with VTI. Now, I hold this in two different portfolios. I have about 58 shares. So VTI is the total U.S. stock market ETF from Vanguard. It's not marketed for income, but when the entire market performs well, the dividends follow. So this investment gives me broad market exposure, diversification, and quarterly dividends coming in. So I'm up about 36% on one of my positions where I have 35 shares, and I'm up 54% on about 23 shares that I've been building on since this fund was under $200. So I received $201.85, which it just helps me to build up my share sizes. I have 20 shares of VOO, and I received $137.96. And this is the S&P 500 investment from Vanguard. I'm up 45%. The S&P hit all-time highs about 39 times in 2025. And so VOO benefited from the market growth, the dividend payouts, allowing me to have dividends to reinvest, helping the compounding effect while I'm gaining exposure to those top 500 companies. Next, SCHD, the Schwab U.S. Dividend ETF. I received $54.50 63 cents. I have about 57 shares and I'm up 9%. There's lots of debate going on about yield versus growth, comparing this fund to others like VIG. But just like Realty Income, it continued to do its job, having a higher yield, those blue chip dividend paying companies, giving stability during uncertain markets, not much growth when it comes to the share price on this investment also. But I'm still holding on to those 57 shares. Next, SPHD, I received $75.03. I'm holding 40 shares when it comes to this investment, and I'm up 16%. And this is Invesco's S&P 500 high dividend, low volatility ETF. Another investment that quietly and steadily contributed towards my dividend income. And now let's go on to the growth stocks that pay me. So none of these investments were added to my portfolio for a dividend, but it's a nice bonus. When it comes to Google, I received $20.30. I currently have a little over 25 shares and I'm up 135%. Google has had a massive year with growth due to AI monetization, growth when it comes to cloud computing, their advertising. So a growth stock that has a bonus of a small dividend that can help you continue to build. Apple, I received $60.79. I'm holding 60 shares. I'm currently up about 73%. So these growth stocks have modest yields, but in time as they grow, hopefully having massive cash flows, they can consistently take steps to increase their dividend payments. So they pass on this to us as a reward for being long-term shareholders. Microsoft, I received $9.82. Another example of dividends from a company that is thriving from innovation, from cloud, AI, and the dominance of Microsoft when it comes to products like Windows, Office, and Azure. Next up, let's talk about Target. I received $45.95. And Target is an investment that has continued to struggle more and more over the last few years. I have 10 shares currently. I'm down 31%. Last year in January, when I did this update, I was only down 8%. So I haven't sold any shares because I have been waiting for that time when the share price actually turned around, and it hasn't. So accidentally diamond handing this one doesn't happen very often when it comes to my portfolios, but they've been steadily paying out their dividend, working to stabilize their cash flow, paying their shareholders like me who are remaining patient. When it comes to Target, let me touch on 4 reasons that they have been struggling over the last 4 years. First, back in 2021, we received stimulus checks and sales were strong while people were able to buy their wants. But then as inflation crept in, consumers shifted their spending to their needs. And we're going to Walmart, for example, to get their groceries and essentials. They got caught up in a lot of controversy related to social policies. They've been faced with a lot of theft going on in their stores. Their profits have been impacted by overstocking their stores with products that weren't moving, causing them to have to slash prices and lose money. But even with all that, you see, just those 10 shares gave me a pretty significant dividend related to the other growth stocks in my portfolio that I'm holding. Target is a dividend king. They've been raising their dividend for over 50 years. So for those of us that are holding on, getting that about 5% yield, hopefully that share price recovers, giving us the growth that we expected from this company. So I received $4.51 from Meta, the company behind Facebook and Instagram and Threads. I only have 3 shares when it comes to that position. I'm up 19%, and Meta is newer to paying dividends. But as I said, always nice to receive. Disney, I received $6.80. And this is another position where I started to sell some shares towards the end of 2025. I'm currently down about 2%. So Disney has also had a lot of struggles with their parks and trying to remain profitable against bigger streaming services. Now, last up, Nvidia. I received 73 cents. Just like Google and Microsoft, not one that I'm holding for income. It's just about ownership. And the growth of this investment speaks so much louder than any dividend payout. So in my update from last January, received $948. And this time around, I've received about an additional $200 just from having a long-term mindset and staying invested. This is how my dividend income has quietly and slowly helped me to grow my portfolio. When it comes to investing, I have goals outside of retirement, and so I have portfolios like the ones we took a look at today. If you're interested in opening a new account, check out my referral link for MooMoo. The link and full details will be in the description of this video. So today was just a recap of those quality companies and funds that pay me for being patient and holding on month after month, quarter after quarter. So for 2026, I'm going to remain focused on striving for growth in my portfolio, reinvesting my dividends, holding on to many of the core positions and funds that we took a look at. So I hope you enjoyed this video. Like, subscribe, and hit that notification bell so you can keep up with my upcoming videos and live streams. Let me know your thoughts on the positions that I'm holding and the dividends that I receive. I am Lisa J. Stocks. Thanks for watching. Okay, bye.